Good morning. Welcome all. We'll still be starting at about 9 o'clock, if not maybe even a couple of minutes after the hour as we let our colleagues in. Happy Friday Eve to each of you. We're excited about this morning's and afternoon's training session. There's a lot of dense material. We hope to engage you and to answer the many questions you may already have and those that may arise as we begin our discussions on grants fraud. Doesn't sound like an exciting topic, but you've got Mr. Eric Russell, my colleague and aficionado in the grants management and frauds domain, who will be your expert, knowledgeable person for the day. I am happy to be here. I'm Dr. Ayanna Cummings. I have 24 or more years experience as an adult trainer and educator, and of course, have various capacities in grants, capital contributions, and grants management of my own, operating my own consultancy and 501c3 private foundation that operate under those same premises, relying upon grants and funding from outside sources. So I'm very happy and privileged to be among you today. I know that each of you brings with you a deep passion and commitment to the programs that you are instituting that will or have already been funded by the great state of Maryland's Governor's Office of Crime Prevention and Policy. Good morning to you, Mary, and good morning to you, Quentin. On behalf of the Anadria Consulting Team, we're delighted to greet you this morning and happy to present. So as we continue to admit your colleagues, I will pause momentarily and we'll get kicked off in a couple of minutes. Thanks. Awesome. So I'll go ahead and dive in. As this training session today is being recorded, you will have an opportunity, if you're having to break away during today's training, please feel free to do so, to handle your own business, and just note that we will provide you with a link to the recording at a later time, and any modules about which you have additional content questions or questions specific to your own area, please don't hesitate to ask them now in the chat or in a Q&A during or after the session if we're not able to address them as we go today through the modules. Given our time management constraints, we will of course address them in writing and publish them through the state of Maryland Governor's Office of Crime Prevention and Policy. Again, I am Dr. Ayanna Cummings on behalf of Anadria Consulting, presenting with Eric Russell, the dynamo in grant. Good morning, Eric. Have you had your
Good
coffee?
morning. How's everyone doing?
Oh,
Yes, I've had my tea. I'm on Central Time Day, so it's a little bit early, but it's nice. So greetings from the great state of Minnesota today. Glad to be with you again, Miss Ayanna.
thank you so much. It's a pleasure and honor to be here. Thank you. Next slide, please. We'll be talking today about grants, fraud, risks, and prevention. This is your very first module. This will be the first and last time we'll go through today's agenda. Just briefly to let you know how the progress will flow. Our first module will be about 50 minutes long on understanding grants fraud. We'll do a brief 10-minute break after module 1 and after each module, including 1, 2, 3, 4, 5. Module 2 will come at 10 a.m. on hopefully at the top of that hour until 10:50 on common fraud schemes. At 11 until 11:50, immediately prior to our lunch break, we'll have module 3 on internal controls. And then we'll have a 1-hour lunch break, hopefully give you some additional cushion there of 10 minutes for lunch, and resume with the balance of module 3 on internal controls, where we'll do some interactive exercises, some case studies and such at 1 o'clock until 1:50. Module 4 will then pick up on fraud prevention measures from 2 until 2:50, and Module 5 on conditions and compliance will begin at 3 to 3:50. We have a 30-minute Q&A session scheduled. Again, I want you to feel free to go ahead think out loud, if you will, into your chat, ask questions, engage with one another in the chat, laugh out loud, send smiley faces, frowning faces, upside down faces, whatever it is, to let us know how you're feeling. And we'll continue to facilitate by checking in with you to be sure we're all going at the right pace and keeping you engaged and abreast of what needs to happen. General housekeeping notes here. Videos of our previous training session on grants management are available on the gocpp.maryland.gov/grants/site. As you wish, there will be a certificate of completion available, but you must complete both your pre and post training assessments in order to receive your certificate of completion. You may access those assessments by scanning the QR code that you see on your screen now. And so we'll pause momentarily for you to get your scans or to take a brief picture of this slide so that you can do so at a later time. Thanks, Alyssa. Next slide. All right, let's dive on in to Module 1, Understanding Grants Fraud. Our objectives for learning today include understanding our fundamental definition of fraud, distinguishing it from error, identifying and differentiating between various types of fraud relevant to grants management. We're going to begin to recognize those common red flags that may indicate potentially fraudulent activity within grant programs, and you'll have some scenarios where you'll have to kind of think out loud and maybe engage in identifying some of those red flags and appreciate, lastly, the importance of a proactive approach to understanding fraud risks. So we've got a fourfold learning objective, and we're going to get through it. Next slide, please. As we introduce fraud, we must understand why it matters in grants. And so this is our very first and naturally most critical first step in effective grants management. And the key points that we want you to walk away with on understanding why we approach grants by analyzing and assessing the risk involved with fraud is that grants involve significant public or private funds. And so they are vulnerable to misuse due to complex regulations, diverse stakeholders' interests, and sometimes very limited oversight and management. Fraud erodes trust. It wastes resources and undermines programmatic goals. Each and every individual who is involved in grants in any capacity has a role in prevention and detection of fraud and, of course, assessing risk and mitigating it. So what exactly is fraud? As we define deception, let's begin by giving a core definition here. Fraud is any intentional deception, misrepresentation, or concealment of a material fact by law for the purpose of inducing another to act upon it or to his or her injury. So let me just repeat that because I jumbled those words up. Apologies there. Inducing, in other words, influencing another to act upon it to his or her injury. And when they say act upon it to his or her, they're saying the target of the deception is injured thereby. Okay, not the person who has perpetuated the fraud, but the target thereof, the victim of the fraud, is injured thereby. And so there are some key elements here. Intent is deliberate, it is not an accidental. Deception is misleading or tricking someone, basically lying, deceiving. Material facts, the lie that matters and influences the decision, and that's determined by a fact finder in a court of law. Reliance, the victim acts based upon that lie. The reason the victim took the action, made the decision they made, was because and directly attributable to the deception of the fraudulent person. And that damage or gain, which is the injury, is what the victim suffers. It is a loss, and the perpetrator has received a gain thereby. And so the distinction here is there's a difference between fraud and error. One's intentional, one's not. A mistake, such as a human error, is unintentional. Fraud is always a deliberate action. Next slide.
Ayana, Ayana, can you hear me?
Yes.
Yes, so one item that we want to definitely kind of clarify for the group is within the grant space, there are multiple definitions of fraud, right? So
Mhm.
including in particular for those that receive any federal funding or flow through dollars from the federal government through GOCAP to themselves, we define fraud based on the False Claims Act as well. And the False Claims Act includes both intentional and unintentional fraud. And that takes us to civil and criminal, right? So I do want to caveat quickly that we are presenting as non-attorneys and laypersons. So I deal primarily with the compliance area where I'm the specialist that works on fraud investigations and matters of that nature, but as opposed to legal guidance. So nothing we say today should be considered legal guidance. But within this realm and within our scope, we do look at the False Claims Act and the uniform guidance, which cross references to the False Claims Act for the definition of fraud. And that includes items that we knew or should have known were misrepresentations, errors, intentional or otherwise, that can move you into that fraud zone. So, as Ayana mentioned, if you're looking at the potential legal risk area, then yes, you certainly want to look at the criminal element that includes the harm, the intent, things of that nature, and the attorneys certainly run with that and make their ultimate conclusion regarding fraud. We cannot conclude on fraud as laypersons. It is a legal term. But we do have to look at the risk of fraud from both the what one knows and what one should have known to be errors and error conditions. So just wanted to clarify that with respect to the grant specific context as well, because it'll play out through today's materials also. Back to you, Ayana.
Okay, awesome. I told y'all Eric is the guru. So if you do have specific questions, please place them in the chat. Hopefully, Eric can take the time to answer those as well. So, what are the key elements of the legal definition of fraud? It requires these elements, including intent, misrepresentation. Those two must be present. So let's get into a little bit more detail. What do we mean by a representation? A statement or an action. An action doesn't have to be something involving physicality. It can be a decision, for example, a material fact, anything significant to the decision being made by the person who is victimized or the target of the deception, which is false. The representation has to be untrue. And is it made with the knowledge of its falsity or reckless disregard for its truth? The perpetrator who told the lie knows or should have known, had duty to know that it was false and still perpetrated it as though it was true enough for the person who is targeted by the fraud to rely upon it, with the intent to induce reliance, designed to make someone actually believe it, to influence them to make a decision or take an action directly related to that particular lie or falsity. And so the victim then acts on that false information to their own detriment and then thereby suffers a harm or loss, and the perpetrator witnesses the gain. This matters because these elements help identify potential legal action. When you're in a court of law, if all of those elements are not present, there is still some vagary there as to what decisions would be made. And so, anytime you have an intentional false statement or influence coming from someone that you should have known, that should have known or did know that it was false to begin with, that should constitute fraud enough for you to scrutinize it and to avoid it entirely out of safety, for your own grant and the funds related thereto, and anything that would trickle from that as a snowball. Next slide. There are different types of fraud, as Eric has already stated, and they can be categorized in this way: theft and misappropriation, embezzlement, kickbacks and bribery, false statements and representations, conflict of interest, and conspiracy to defraud. Next slide, please. So what is theft and misappropriation? It's a direct abuse of assets, and it's very common where people directly steal or misuse an organization's assets. And so theft is the unauthorized and unlawful taking or use of an organization's assets, including grant funds, for personal benefit or for purposes unrelated to the grant's objectives as initially stated in the proposal. Examples in grants: directly stealing cash from a project's petty cash fund, using grant-funded equipment, laptops, and vehicles for personal use, selling grant-purchased supplies for personal profit, charging personal expenses to a grant account, like groceries, home renovations, and we'll talk about travel and exorbitant purchases at a later time. But even minimal things like going to the grocery store or filling your gas tank up and such can also constitute theft or misappropriation or both. Okay, next slide. What is embezzlement? Embezzlement involves a betrayal of trust where someone or people misuse funds that they have been entrusted to manage. It is defined as the fraudulent appropriation of money or property entrusted to one's care, but actually owned by someone else. It involves a position of trust between those two parties. The key difference between embezzlement and theft is that embezzlement involves someone lawfully possessing the assets at the time of their taking. So an example here would probably very much help. A project manager diverts grant funds from the project bank account to their personal account. A bookkeeper creates fake invoices and pays them to themselves for grant funds. An executive uses a credit card for lavish personal travel and charging it to the grant as program expenses. I'll pause here. Does anyone have any questions going on in the chat that we need to pause and acknowledge? No. All right. What are kickbacks? The unethical return. A kickback is a payment made to someone in exchange for a special favor. It is especially used in an illegal or unethical case, such as getting a contract awarded. It is a form of bribery. You hear about it a lot in corporate America, but when it happens in private grants management and government, there are probably even more severe penalties. A grant recipient receives a kickback from a vendor in exchange, for example, for awarding them a contract. An employee steers a grant-funded procurement to a specific company in return for a percentage of the contract value. Submitting inflated invoices and then receiving a portion of the overpayment back from the vendor. See, so it may look legit on paper, but that scheme eventually gets caught up, and you can't continue to lie without having to back up the previous lie and so on. So eventually it snowballs, as most crimes do, into something that the person who's doing it really didn't conceive of, when they first started. And so we'll do a little exercise where we kind of have to put ourselves in the mind of a criminal in a later module, and you'll see what we're talking about there, where people just kind of, they get into a criminal mindset and it's hard to snap out of it. Next slide. False statements and representations. The fabrication of truth. A false statement or representation is defined as providing incorrect, incomplete, or misleading information, verbally or in writing, And that's critical because you can say something verbally and be held liable for it in some context. So as we approach our work in this grants management process, it's important that even not just our written documentation, but our verbiage, and we'll talk in a later module about the importance of training in that regard to ensure that we all have the same acumen and a skill set when it comes to knowing when you don't know something. Sometimes it's best to go research and be resourceful at digging for finding the information rather than giving something that you're not sure is the right answer. To obtain a grant or to misrepresent progress or expenditures. For example, in a grant, what is a false statement or representation? It's falsification of data in the grant application, exaggerating the organization's capacity, false project outcomes, etc. Submitting progress reports with fabricated achievements or milestones. Do we need to pause there? Okay. Providing false documentations, false invoices, or altered timesheets to justify expenses, or misrepresenting the qualifications of staff proposed for a grant project. Next slide. All right, now conflict of interest is also very common, dividing loyalties. A conflict of interest is a situation in which a person or organization has a vested interest, whether it be financial, personal, or otherwise, that could potentially influence the professional judgment or actions in a grant-related decisions. Examples in grants: an employee involved in selecting vendors for a grant-funded project also owns a significant stake in one of the bidding companies. Well, that creates a conflict of interest. A grant project director hiring family members for grant positions without proper disclosure or competitive process. An individual reviews grant applications having a financial interest in one of the applicant organizations. Another conflict of interest. All right. Next slide, please.
Ayana, if we can stop there for a second.
Sure.
So I think it's one of the critical items that we want to communicate is having a conflict is not in and of itself a fraudulent issue. So having potential conflicts of interest is somewhat natural, especially when you're in smaller organizations or if you're looking at smaller communities. We often run into situations where there are relationships between people. The trick, though, is disclosing those conflicts of interest and managing them to the point where you're not creating opportunities inadvertently or otherwise for those that you have relationships with. And that includes organizational conflicts of interest, right? Where you have subsidiaries, affiliates, and others. So there are disclosure requirements that are relevant to grants when we're specifically looking at such a matter. You want to disclose whether there are family members who may be in leadership positions at an applicant's organization. You may have affiliates that are applying for the same grant fund, or for grant opportunities that you are issuing or that you're sending out for as NOFOs. The key is to disclose those items and to recuse yourself from the different opportunities that are present. So that you're not inherently or inadvertently causing the flow of funds to those that you have relationships with that could present a risk of fraud. So there are requirements related to disclosures within the general conditions for GOCPP, as well as within the Uniform Administrative Requirements, Cost Principles, and Audit Requirements for federal awards or the Uniform Guidance. So just want to highlight that you're going to inherently run into situations where there are conflicts of interest or perceived conflicts, and we want to manage them, but not inherently assume that those are issues of fraud. So with that, I'm going to turn back over to Ayana, but wanted to clarify that it's a question that we often get in practice, both within the compliance advisory area, but also when we're dealing with, we'll say, whistleblower complaints and other items in relation to potential fraud matters. So go ahead, Dr. Cummings.
Oh, thank you, Mr. Russell. All right, so what is bribery? It's where one offers influence. Bribery entails offering, giving, receiving, or soliciting anything of value to influence an official action or decision. We distinguish it from kickbacks in that bribery often precedes the action and aims to secure a favor. A kickback, on the other hand, is typically a return after the favor has already been rendered. So bribery comes before, kickback comes after a favor. Okay. For example, in grants, offering money or gifts to a government official to approve a grant application or award, and a subrecipient, another example, offering a facilitation payment to a prime grantee employee to overlook noncompliance. Next slide, please. Conspiracy to defraud. So there is more than one party involved here. Now, what is the coordinated scheme? By definition, a conspiracy to defraud is an agreement between two or more people to commit fraud. The agreement itself, along with the overt act in furtherance of the agreement, constitutes the crime. It's serious because it often leads to more complex and larger scale fraud schemes. Why is that? Because you have to cover your tracks. Examples in grants: two or more employees colluding to create ghost employees with fake employee ID numbers, payroll accounts, and everything else, and split fraudulent payroll. A grant recipient and a vendor conspiring to submit inflated invoices and share the proceeds. Multiple organizations, for example, agreeing to submit false matching fund documentation to secure the grant. So all of that constitutes conspiracy to defraud. Next slide. What is grant-specific fraud? As we categorize unique vulnerabilities. Beyond the general definitions we have just reviewed, fraud can further be categorized by where it occurs in the grant life cycle. When we talked in grants management, we talked about a whole 5, I believe, phase, Eric, life cycle in the grants management process. And those, 4. Sorry, specific phases and aspects of grants management are particularly susceptible. Those key categories include the application, whereby fraud can emerge, performance of the grant duties, and performance of program and project outcomes. That can entail fraud as well. Financial reporting can also entail fraud, and procurement can entail fraud, often linked to kickbacks and false billing. Next slide. So in the application process, how do people end up deceiving grants funders from the start? By definition, application fraud is any submission of false, incomplete, or misleading information in a grant application. People secure funding or obtain an advantage by lying on the application itself. And the common MO there is fabricating qualifications of key personnel, inflating organizational capacity or past performance, misrepresenting matching funds or other committed resources, falsifying project goals, objectives, or expected outcomes, using stolen identities, or creating shell organizations to apply. And so all of that constitutes fraud in the application process. Next slide, thank you. Performance fraud, where people give the illusion of progress that does not really exist. Performance fraud is a deliberate misrepresentation of the progress, outcomes, or quality of work performed under the grant agreement. For example, fabrication of beneficiary numbers or demographic data, creating fake survey results or program participant rosters, misrepresenting the completion of project milestones, falsifying scientific data or research findings, or reporting services provided when in fact none had been delivered. Next slide. Financial reporting fraud, where people manipulate their financial books. Financial reporting fraud is the intentional misstatement or omission of amounts or disclosures in financial reports related to grant expenditures, often to conceal misuse of funds or meet reporting requirements. For example, inflating eligible costs to maximize reimbursement, hiding unallowable costs within allowable categories, failing to report grant income or unused funds, manipulating an account record to create a false financial picture, or even charging the cost to the wrong grant or period of time to avoid detection. Next slide. Ethical versus legal implications of fraud. Beyond the law, it is important to distinguish between what we're talking about as an ethical breach versus an illegal act of fraud. Legal implications include criminal charges, fines, imprisonment, sanctions, civil penalties, repayment of funds and damages, debarment, meaning you would not be able to ever get any federal funding of this kind in the future, and reputational damage and loss of credibility. And all of that could happen simultaneously. The ethical implications, on the other hand, might be even more consequential, where there's an erosion of public trust in your programs, your organization, damage to the organization's mission and values, demoralization of honest employees, loss of vital services to the beneficiaries who would have received the programs, the services, the products of the grant. And this begins to set a dangerous precedent that the organization was founded upon a mission, vision, and value system that was misaligned from the start. Next slide, please. As we look at red flags or early warning signs, let's begin to identify what we're talking about here. Any red flag is an indicator or circumstance that is not necessarily a proof that fraud exists, but it warrants further investigation because it is unusual. It becomes an outlier that skews data to the extent that you wonder how that happened. Important because they signal to people who have eyes enough to visualize on charts and graphs that while I'm not making a definitive inclusion, I am going to pay closer attention because that is weird. It begs someone's attention and follow up. For example, it's like a warning light on your car dashboard, not necessarily saying what is wrong, but telling you something might be wrong with that whole system. Okay, next slide. Financial red flags generally indicate that there's some unusual movement of money. This spike in the graph, for example, wonder how that happened. All of a sudden, an extreme amount of expenses. Certain general financial anomalies can often indicate that there's a risk of fraud, and this is indicated by unusual or unexplained expenditures. For example, very large cash withdrawals or payments to entities that are not known or identifiable, a significant variance in a budget that does not have clear justification. That's why a lot of accountants and controllers like to see that flat variance. You didn't spend any more than you were allotted in the grant, but you certainly did not spend any less. And so that variance, anything above or below, where you said you were going to land when you sought out those funds and itemized your expenses, begs the attention of someone a little more deeply. Missing or incomplete financial documentation, inconsistent accounting records, sudden or frequent changes in vendors or banking details, and excessive or unusual activity in petty cash. Next slide. What are grant-specific flags in targeting grant funds? There are specific financial warning signs that may be present within the grant-related documents that are submitted as a part of the financial reporting process, and these are indicated in our expense reports as expenses may be charged to the grant that are seemingly unrelated to the original purpose of the grant. Anything that is expensed that lacks supporting documentation, like a receipt, an invoice, or a timesheet for that expense. An inconsistent expenditure pattern, where we see that large spending spike at the end of the grant period, for example. A significant overspending or underspending without proper explanation. Payments to vendors or subrecipients with generic addresses like a P.O. box or residential address. And a cost that is claimed that is explicitly stated to not be allowed per the grant agreement. Okay. Behavioral red flags, shifts in demeanor, certain changes in a person's behavior can be a sign that there might be some fraudulent activity that warrants further investigation. Indicators in people include living beyond their apparent means. So there might be a sudden display of wealth that heretofore has not existed. There might be a reluctance to take vacation or sick leave for fear of discovery that, all of a sudden you got, something else going on because someone else takes your place in managing the grant in the office where you're working and finds things out of order, so to speak. Excessive control over records or processes where someone is unwilling to hire or delegate people. Unusual defensiveness or irritability when questioned. Any gambling, drug, or addictive behavior or financial distress. Close association with vendors or subrecipients, and overly protective people who hide and even hover over grant information as it is supposed to be readily available to all grants management staff, employees, and so forth. Next slide. As we document those red flags, when paper doesn't tell the whole truth, fraud can be detected through careful scrutiny of the integrity of those physical and soft copy documents, the digital ones. So indicators and records include altered or photocopied documents where original submissions were expected with wet signatures and so forth, missing documents that don't have sequential gaps, or those that are missing a page 1 through 4, number 3 or 2 is missing in numbering, such as on an invoice or check. Unusual handwriting or font changes on official documents. Documents with excessive whiteout or manual corrections. Lack of proper authorization signatures. Invoices, from vendors with sequential invoice numbers that have different dates, and generic invoices that actually lack those specific details entirely. Next slide. Systemic red flags for the whole organization. Weaknesses in the organization structure itself, its systems and controls can create opportunities for fraud. And that can be apparent in weak or non-existent internal controls prior to instituting the grant program or beginning the application process, such as lack of segregation of duties where people don't have specific roles, titles, and functions, lack of clear policies and procedures that people in the organization must abide by, poor oversight or managerial review, high employee turnover in key financial or grant-related positions, lack of regular reconciliation of accounts, where you don't see a bookkeeper reporting, you don't see profit and loss statements and so forth being generated, absence of a strong ethical tone from the leaders of the organization, and outdated or poorly secured accounting systems that lack the modernity to keep up with financial systems of the modern era. Next slide, please. As we look at vendor and subrecipient red flags, Are the vendor and the grant recipient partners in this process, conspiring to commit crime? The warning signs may also be present when dealing with vendors or recipients, subrecipients. Indicators related to external parties include new vendors with no verifiable business history or questionable references, vendors with P.O. box or residential addresses only, vendor names that are similar to employee names or family members, and unusually high price for goods and services compared to market rates. Subrecipients consistently submitting incomplete or late reports, a lack of competitive bidding process for high value contracts, and the vendor invoices lacking specific details about the services or goods as they would be reported to a fiduciary or governmental entity like the IRS. Next slide. Project management red flags. There might be anomalies in the project management process that we might need to be aware of that can emerge during the project management lifecycle. The indicators in the project execution include significant unexplained delays in project milestones, unverified or vague progress reports, sudden and unexplained changes in project scope or budget allocation, lack of regular monitoring visits or site visits for subrecipients, high discrepancy between reported progress and actual observable results, and unusual pressure from the project managers to approve payments quickly when in fact, the time for reporting and net terms on the invoicing has already been disclosed and has not yet arisen. Next slide. The grantee organizational red flags. The culture and structure of the grantee organization can also be indicative of broader issues. Indicators within that organization might include lack of transparency in operations or financial dealings, unclear organizational structure or lines of authority, frequent changes in key management or accounting staff, a culture where mistakes are heavily punished, encouraging concealment. So if there is no mistake tolerance there, they're not willing to forgive or to tolerate mistakes enough to learn and grow from them. Resistance to internal or external audits and lack of an ethical policy or whistleblower protection policy that would allow anonymity in the reporting process. Next slide. Grantee organizational red flags and acknowledging limitations, not proving but prompting someone to dig further, investigate more deeply. The crucial point here is a red flag is just an indicator. It's not definitive proof of potential fraud. Contextually, a red flag might be a simple mistake. We don't know whether it's actual fraud, but when we see multiple consistent red flags, those warrant close scrutiny. This call to action means that red flags trigger curiosity, further questioning and investigation, but not necessarily immediate accusation, just like in, innocent until proven guilty. Next slide. As we look at this exercise and discussion, let's spot the red flag. So let's read the scenario. A nonprofit organization receives a grant for community outreach. The project manager, who rarely takes vacation, recently purchased a new luxury car. You notice several invoices from a newly established cleaning company, Clean and Gleam Services, where the address is a post office box. The invoices are for general administrative support and seem unusually high for the services described. When you ask the project manager for more details, they become agitated and dismissive. So let's discuss what red flags might be present. Feel free to chat or come off mute.
The purchase of a new luxury car.
That's a very good red flag there. Yeah, very good.
The cleaning service being so brand new, but also it looks like the descriptions aren't consistent with the name of the business.
Right, general administrative support as opposed to cleaning. Right. And then also the price they're charging is unusually high there, right? Excellent. Okay, so what category do those flags fall under? So we talked about the luxury car, and we talked about the invoicing from the cleaning company being misleading as general administrative support and unusually high for cleaning services. So what categories under the embezzlement, misrepresentation slide? Okay, the car would fall under embezzlement, financial and behavioral, correct, correct. I'm looking in the chat now. Very good. Behavioral red flag, excellent. False claims, misrepresentation, very good. Good morning. Good morning. All right. And what would you do if this were your grant that you were managing? What would be your immediate next step? Oh, rarely taking a vacation. That's a good because they're so, hovered over the management of their day-to-day duties. Very good. You would do a site visit. That's excellent. That's an excellent approach. You would go to the location to just stop in. You would request documentation. That's another excellent one. Excellent. On the both, you could do documentation on both the car and the cleaning company. You could also call the new vendor Clean and Glean, right, and do some investigation of your own. That's excellent. Start the investigation by looking into the cleaning business. Excellent. All right. So we've got a lot of answers there. I'm sorry, go ahead, Eric.
Yeah, we can just take a step back then. Sometimes when we have red flags where our natural inclination is to kind of jump to almost to the conclusion that there's a problem. And one thing we want to remember is that when there's a red flag, it doesn't necessarily mean that there is a fraudulent issue or that any action is really required at that point. So we want to kind of take things in stride. So to take a step back, one of the first questions that you may want to ask is, why are there cleaning services involved at all that are within the scope of a project? So in which case there's just more due diligence on what needs to do on the overall activity. And that may be something that you hand off to your internal audit group, for example, or maybe there's a disclosure that you need to make or a communication to a pass-through entity or other organization type. So, and we do that to make sure that we don't inadvertently get ourselves into a situation where we could inadvertently interfere with something that needs to go to law enforcement. Right. So if you see something that seems improper, there may be a monitoring approach that's necessary. Sometimes there's nothing wrong with having a luxury car. That person could just be married to someone who has more dollars. Right. There are those types of situations. So we want to make sure that we're not investing resources to dig into something where there may not be a there, but take all of your red flags and combine them in the aggregate, and then talk to your management and determine whether or not there is action needed and what that action needs to look like. Because one thing that you can run into are situations where individuals that we need to work with, right, and maintain good relationships with get agitated because maybe they don't take a lot of time off. I've got family members that are teachers and they never took time off. So when you think about those types of items, it's not necessarily a situation where there is a fraud risk, but maybe there's more due diligence that needs to occur. So we want to make sure that folks are comfortable and that we don't inadvertently get in the middle of something that could require law enforcement impact as well. So let's take everything in stride as we're looking at what the red flags are and then what the next steps are.
Great points, Eric. And up to your point where you said you take the red flags in the aggregate, go ahead and start your documentation process. You might even do a spreadsheet whereby you document the new luxury car, the date you noticed it, the Clean and Glean service, and then you would put a note there on your spreadsheet that said something about cleaning versus general administrative support, and then put your costs there that they're charging for. And then all of that, once you see more of that flowing, then you can begin a more thorough investigation. And it might be something like Eric said, where you would almost have to have either a private investigator or a financial investigator or something like that to do more digging without the person's knowledge or without them knowing who is asking that question. Because there are financial investigators who can dig up people's real financial statements on the personal and business side without knowing who's asking. Right. And so just beware of that. But as Eric said, it may be a misuse of your time and your resources to start digging immediately. I think what they said in the chat was very poignant, to just pick up and call the cleaning company and just ask a couple of questions right quick. If you got 5 minutes on your lunch break, that could be a quick solution. And then, of course, something about the documentation procedure whereby you're adding your aggregates up in your spreadsheet and then putting that spreadsheet away in a few minutes. Okay. All right. Thanks so much for y'all chat participation. Y'all are the most amazing audience. As we summarize today's module 1, we of course want you to walk away with your nuggets. So we'll recap. We did provide a foundational understanding of fraud, its types, and how to spot key warning signs. As we recap, fraud is intentional. It's distinguished from human error in that fraud is intentional, human error is a mistake that was simple and unintentional. It encompasses various schemes, whether it be theft, false reporting, and the other list of things that fraud can entail. Grants are particularly vulnerable to fraud at each and every stage, from application to reporting of the outcomes. There are red flags that create vital early warning signs that may demand attention when looked at holistically, and we need to understand these concepts as an essential first step as we effectively prevent fraud in our own grants management processes. An action item for us is to remain vigilant and to trust our instincts. When something doesn't feel right, let's just kind of breathe and think through things rationally to begin to think of solutions to the problem that might be beneficial all around, particularly for the recipients and beneficiaries of our grant, who are the reason for our organization's mission and values. Thank you so much. We'll pause here, pick back up at about 10:02 a.m.